Okay, time for first call when the viewer gets an opportunity to put a question directly to an investing professional. This morning, that's Allan Small. He's our featured guest. Jimmy from Welland is our first caller. Jimmy, thanks for calling.
Hi, Paul. Good morning. Question for your distinguished guest this morning. Allan, on quick service restaurants, Brands International has quite a breadth, dual listed New York, Toronto, international exposure with a lot of investments in China. What's going on there? Give us an indication, please.
Yeah, the name is not doing so well, obviously. Trading near lows at around 17 times earnings, in and around 3.3% dividend yield. I just think right now it's a name that, well, number one, I think investors think that, as the Canadian economy starts to slow, a lot of individuals will probably, maybe go to some Tim Hortons restaurants or Burger King or the quick service type restaurants, but doesn't seem to be panning out. It doesn't look like the stock really has gained much traction, although it is a little bit higher right now over the last little bit. But overall, I just think that the market is looking at other areas for growth. It's a name that is, as I said, fairly cheap right now, trading near low points or just off their lows. So I think it's a name that you could take a look at. But if you're looking for growth, I definitely would be looking at other areas outside of that space.
Okay, thanks, Jimmy, for your call. Let's go to Paul in Toronto. Hi, Paul.
Hey, I want to know about how the tariffs will affect construction sector in Canada. And I want to know especially about this wood construction, which was, the stock was doing pretty good before these tariff things. It was at all-time high 32, and now it's like trading at 20. And in general, like even HPS is pretty good company. They're pretty down now. So what's like the overall effect gonna be on the construction with the tariffs?
Okay, thanks, Paul. The audio is not good there. We know the question is on the tariff impact of construction stocks. Aecon would be perhaps a stock that would fall into that sector. What's your take here, Allan?
Well, I think obviously tariffs are going to make the costs of doing construction in general a lot higher. Whatever the materials are being used, that cost will go up. Obviously, it's going to depend on what type of construction you're doing. If you're building homes, obviously, any tariffs on lumber and anything going across the border will just in general, costs are going to rise. So I think overall, some of the construction names, some of the bigger names, I actually like some of them. They're actually trading very cheaply, but you have to be careful because as long as, if these tariffs last a long period of time, months or maybe a year or greater, I think some of these construction names will definitely be negatively impacted. But I do like some of the big infrastructure names like United Rentals down in the U.S., and Caterpillar, some of these names that provide the heavy machinery for construction, for infrastructure build. They are trading fairly cheaply right now, but definitely tariffs will impact them.
Okay, thanks, Paul. Let's go to Elio in Montreal. Hi, Elio.
Good morning, gentlemen. My question is on Capital Power. I've held this stock for the last 4 or 5 years now. Made some great dividends over the years. Just the capital gains part of this equation seems to have me grasping at straws as the stock corrected violently on the 27th from 61 to 51 and seems to be struggling for some reason with everything pointed in the right direction. Am I missing something? I'll hang up and wait for your answer. Thank you.
Yeah, I think a name like Capital Power, I don't think you're missing anything. I think it's purchased like many other power generation companies, purchased for the dividend yield first and foremost. Unfortunately, it's had a bit of a rough ride. But again, a name that I would look at if you're looking more on the income side versus the growth side. I think the ups and downs you're going to have to take as an investor because you're in there for mostly the income that these types of names produce. I like other names. I like a lot of the utilities. Some of the pipelines make sense to me as an alternative. You can get some really good dividend yields right now in that space. So for me, looking at Capital Power, yeah, there's going to be some ups and downs. But overall, if you're in there for the dividend yield, as long as that yield remains intact, I think you can stay into some of these power generation or utilities names.
Okay, thanks for that call, Elio. Let's go to the email inbox. Mike has written us an email from London, Ontario. Could I please get your guest's opinion of Alimentation Couche-Tard, a company that's very much in the news these days?
Yeah, Couche-Tard, I like it. A great name, obviously trading well off its previous highs. A name that I think individual investors can get behind now, as you can see, trading down to just above $70 once upon a time. in the mid 80s. So it's a name I think that actually very rarely gets as cheap as it has. And a name like this, I think you can buy at these levels because I think it's a name that going forward, we've talked about it a lot, looking at making acquisitions, et cetera. Unfortunately, didn't come to fruition. But overall, I think for me, Couche-Tard is a very good quality Canadian name that over time seems to go from the bottom left to the top right, and a name that I think you can buy on these types of dips.
Okay, here comes another email from Gus. How will Canadian Tire do, Canadian Tire stock, in a shop Canadian environment where we are right now? Many Canadian consumers insisting that they buy Canadian goods. Now, a lot of goods sold in Canadian Tire stores come from other places, but I'll let you tackle the question.
That's true, right? And Canadian Tire, yes, obviously the name Canadian in it, so I think a lot of people will look to shop at Canadian Tire. The Buy Canadian is definitely a lot stronger now, just in the last few weeks. The thing about Canadian Tire that most people don't realize, great dividend yield. And so you could get some good growth also with a good yield. And it's a name, again, that I've looked at on dips in the past. I think a great company, but of course, slowdown in the economy, tariffs, these things will definitely affect a name like Canadian Tire on the retail side. But it's a name that I actually like. I like the yield, and I like the potential for growth, again, looking at buying on dips.
That is Allan Small. Allan, thank you a great deal, as always, for joining us here. Big help.